Some breaking news this hour. Singapore's economy grew at a faster than expected rate in the first quarter of this year, despite growing geopolitical tensions globally. Growth was driven mainly by robust AI-related demand in the manufacturing sector. In this final reading, Singapore's GDP expanded by 6% on year in the first 3 months of 2026, beating expectations. That's also higher than the 5.7% growth recorded in the previous quarter. On quarter basis, the economy grew 1% higher than estimates as well. However, it is an easing from the 1.3% expansion in the final quarter of 2025. Now, the government has maintained the GDP growth forecast for this year between 2 and 4%. That's despite the rising downside risks resulting from the Middle East conflict. Trade Ministry said that the forecast was based on expectations that the strong AI boom would be sustained for the rest of this year, and also expecting expansionary fiscal spending and steady central bank policies to support global growth. For more, we're joined by Khoon, head of Asia Research at ANZ. Khoon, thanks for your time today. So just looking at the final read on Q1 GDP, it's up 6% for that first quarter. It is better than the previous quarter as well. I mean, how much does this actually reflect the actual underlying momentum, especially as we saw a bit of a moderation there for the quarter-on-quarter growth?
Good morning to you. The Singapore economy is showing remarkable resilience in the face of the Middle East conflict, and this underlines very strong growth momentum in the Singapore economy, particularly at the start of the year. And you have to thank the AI-related investment boom for that, because in the absence of that, I think the Singapore economy probably would not be faring as well. I think it's important to put it in context as well. Not only the slowdown from Q4, but the fact that the advanced estimates actually showed a contraction initially quarter on quarter, which has been revised now to 1% Q on Q, suggesting that actually there's a lot of still strong underlying momentum in the economy, which hopefully will be able to offset any of the negative impacts from the Middle East conflict.
Yeah, and I suppose that's the reason for them keeping the GDP growth forecast for this year at 2 to 4%. But what is your outlook on whether, the subsequent readings will be able to help Singapore reach that growth target?
Well, my forecast is for 3.2% for full year 2026. So this is close to the midpoint of the MTI's new or maintained forecast. I think there's every reason for the economy to be able to perform and hit perhaps even the upper end of the MTI's growth target. That's because the economy has started off Q1 on a very strong footing. And all the indications are that Q2 growth will also be similarly strong. We've already had, for example, the non-oil domestic export numbers for April that's showing very, very strong growth, particularly for the electronic segment. So that's telling us that manufacturing sector activity remains extremely strong. Other indicators that I look at, for example, like the S&P Global Economy-wide PMI reading, even electricity demand, all continues to point towards a very, very robust activity. So there's no real signs of any slowdown at all in the indicators so far.
Yeah, and just how much of a buffer, right, this AI demand could be, because, when we look at the Strait of Hormuz remaining closed for one, that means your transport, petrochemical, fuel segments, those are obviously going to be facing some prolonged strain. Even if the strait is reopened, it's going to take a while for things to get back to normal. So, in terms of the buffer, how much of a buffer could it provide? And also, how vulnerable could Singapore be to a sharp pullback in global AI spending if those tighter financial conditions globally materialize?
Well, that's really the biggest risk to not only the Singapore economy, but to the regional economic growth outlook as well. At the moment, the AI-related investment boom is the single biggest driver of activity, particularly for the manufacturing sector. Now, if that were to turn into a bust, for example, then the spillover effects could be quite immediate. For example, if the hyperscalers start to scale back their investment plans, I think you're going to feel that flowing through extremely quickly. But what I'm comforted by is, the still very elevated CapEx spending plans by the major US hyperscalers. They are forecast to double their spending on capital expenditure this year compared to last year. So that's why the manufacturing sector in Singapore continues to remain extremely strong.
And Khoon, what is your base case outlook for Singapore's core inflation over the next 12 months? For one, we're also getting the CPI figures later this afternoon. And also with that, what your expectations are for MAS policy in the coming quarters?
Well, we're going to get the inflation numbers later at 1 p.m. today. I'm looking for the headline inflation to increase to about 2% and for the core inflation to tick up slightly to 1.8%. Now, that's still very mild readings, and that's because I think the full impact of high oil prices is yet to fully be reflected in consumer prices. We've already seen, for example, petrol prices go up. There's been price increases for those industries that are extremely heavy users of diesel and oil. But we haven't yet seen a lot of spillover effects from other types of products. But I think that will slowly come in the coming few months. There tends to be a lag from when high oil prices start to filter through into inflation. So I do see core inflation, for example, potentially accelerating in the next few months towards closer to 3% by Q3 or Q4. And in terms of MAS policy, MAS tightened policy at their April MPS. I'm expecting them to follow up with another tightening move in July. And that's largely to ensure that inflation can remain well behaved, given that the economy is still performing extremely strongly. Therefore, for the MAS, I think their focus is more on making sure that inflation does not rise too high.
All right, Khoon, appreciate your time today. Khoon Go there, head of Asia Research at ANZ.